So you really want to succeed in trading futures. The most important thing, other than having a skill set to include a strategy, is having a solid trading plan to trade from, all right? And the reason why is because most of you probably have heard, in some point in your life that 90% or more of retail traders actually fail at succeeding trading, all right, within the first year, while many fail within the first 6 months. How many of you have actually, I know a lot of you are probably trying to pass evaluations or these challenges through these prop firms, and it feels like a vicious cycle to where you have succeeded in 1 month where you pass something, and then maybe the next month you've blown that actual account, and then you're back at square one again, trying to pass another challenge. I mean, that is the prop firms in all go when it comes to the business in which they have their model centered around, is they want to see you fail more than actually succeed, okay? Because they're making money by you constantly buying those challenges, okay? I know a lot of you are struggling, but you have to understand one thing. A solid trading plan is going to turn everything around for you, okay? I know a lot of you just sitting out here researching and trying to find video content. How do I understand how to learn and understand market structure? Watching video content surrounding a specific trading strategy to actually trade without incorporating a trading plan that's going to really be the rules, okay, that you need to follow by on a daily basis when you're trading whatever market it is that you're tied to in futures. And without having a solid trading plan, what's that going to lead to? It's going to lead to you spiraling out of control, taking trades that don't make sense, revenge trading, and that's going to lead to you having or making costly mistakes that are going to cost you a lot of money in the end and cost you to have or take on a lot of losses just as well. So, of course you want to figure out the foundations and you want to understand the educational components to be able to trade correctly, but you've got to have a plan put in place, all right? And I'm going to go in this video today and talk about what those things are in order that you need to make sure that you write up. Trading plans should be individual to each individual person. Now, I'm not saying you can't use a template from someone else, for example, and in reality, they should be short and sweet. They don't have to be all long-winded. You can write them down on a piece of paper or you can put them on a whiteboard somewhere. But you want to make sure that you're sticking to that plan each and every day if you want to succeed. So again, we'll talk about the essential elements of a trading plan, to include like risk management, the strategy development, which is basically, I cover the strategy and how I trade surrounding, what I look for each and every day using range-based charts. You have to write that up and put that in your plan for yourself as far as, a plan of action or a strategy that you're going to stick by each and every day. Don't deviate from that. You've heard me say in videos before, when you move away from your strategy and start to try to, take mixtures of things and bring them together, sometimes that causes a mess of things for individuals, and then their trading just kind of spirals out of control and they can't seem to get back on task to what they were doing before. All right. And we'll also talk about like things like market analysis, which I talk about just understanding the flow, the order flow of the market, being able to see structure and understand the breaks and from the upper movements, making higher highs and higher lows. All those things, guys, you have to put that in your plan. You have to first and foremost understand those are the component pieces right there. Market analysis is just being able to understand what the market has done prior to and currently present time, okay? Meaning the flow of it, simply put. So no matter how the market is actually moving, okay, in order for you to be successful in this business, you're really going to have to place emphasis on sticking to your plan. I know it's hard sometimes because we see great setups and we want to take them, but if it's not part of the strategy and the plan that we put together for ourselves, then you might want to just stick away from doing it. Some people that trade, supply and demand like myself, 98% of the time, I don't have interest really in trading support and resistance, okay? I don't, have emphasis or interest in trading fair value gap areas. There's so many different ways to trade, and you should know this by now, but you need to put together a system in place for yourself that's actually going to work and stick with it. So the first thing I want to talk to you about, which you can include into your own personal trading plan, is number one, okay? Having a goal, a trading goal set for yourself, all right? That it's either going to be long-term or short-term, and I recommend, having both, okay? It could be some means of having a financial objective as far as how much you're actually wanting to make on a daily to weekly or even monthly basis. Meaning, okay, so having basically daily profit targets that you're looking to compound on, and at the end of the week, say, hey, I've reached my goal here, and maybe maybe you have went over that certain threshold of a goal that you're looking for, and maybe you can pay yourself out something, okay? When you start compounding an account, then you'll know at some point, there should be a percentage amount of what you're compounding and making, how much you want to take off for income for yourself, okay? So you also, again, you want to be able to understand monthly returns in reference to how much am I making. This is the goal on which I'm looking to make monthly as well, and understand capital growth, the overall growth that you're looking to, but that's all tied to a certain percentage, okay? Meaning that maybe you're looking to have gains of 4 or 5 or 6% on a day, and maybe taking risk of only 2 or 3%, okay? Based on the capital that you have, a trading capital that you have in your account. Again, that's number one part of what I would say when it comes to the trading plan, is having a strategy, not a strategy, but actual trading goals that you are working within. All right. Number two, let's talk about like market analysis and having a strategy. All that really is just understanding, first and foremost, what market are you looking to trade, and really diving deep into that niche. Okay. If you're trading futures and you're looking to trade maybe the NASDAQ or a commodity like gold, then you want to really understand that particular market, the order flow of it. How does it typically flow? Understanding, kind of getting a feel of it like it's, second nature to you, like it's the back side of your hand. All right. So understanding market analysis is just really understanding what typically this market is essentially doing. All right. That comes with, the flow of the market, order flow, making higher highs and higher lows, just basically going back and just analyzing. It could be from month to month. It could be from week to week. It could be from day to day, depending on your trading style, whether you're a swing trader or a positional trader, or like myself, I like to scalp on the day. I'm a day trader, and intraday I'm only scalping for a few hours, and that's it. Okay. So that's what you need to figure out too, is what type of trader do you want to be? Okay. And put that and center that, you're playing around that as well. You say, I want to be a scalper by heart or by nature. Then you must understand what we're looking for is short burst movements in the market, either from, for me, I'm trading supply and demand. So I'm looking for key areas or levels surrounding, impulse moves where the market broke through an area or swings high or low, and looking for retracement back to that either demand or supply area and taking a scalp from that area. Okay. One thing also when it comes to, your trading plan surrounding the market analysis and strategy part, which is number 2 to the plan, you can put it as, your entry and exit criteria. Okay. Meaning understanding, how much profit and how much target how much profit and how much, my stop is going to be. Okay. A lot of traders, I like to go for a 1-to-1. I would recommend always try to at least go for the 1-to-1, but also, set up running or trailing profits. Okay. Meaning have your stop locked in place. So if you hit a 1-to-1 profit area, right, move your stop up, say for example, to break even, and then allow the remain and take off once you hit that 1-to-1 majority of your contracts, and then maybe allow, 15% of that or 20% of what you initially went in with. And it could be, so let's say 2 contracts, take off 1-to-1, 1 contract, and then allow the second contract to do its thing and run. All right. So you always want to have an exit and entry strategy when it comes to the part of the strategy what you're trading. Okay. As far as risk management, again, that is all it just boils down to be just talking about stop loss, where you're going to place that at in reference to where your target profit is actually at. You never want your stop loss to be greater than your target profit area. Okay. Meaning I'm not looking to go for, placing a stop at, say for 20 points, and I'm only looking to pick up 10 points in the market. That doesn't make any sense. You're really right. So because the market comes back against you, then you're basically going to take a hit greater than the profit target area on which you were looking to take profit at. All this, again, is part of the trading plan. Okay. So if you want to really be successful, you need to write out a solid plan for yourself. All right. Let's talk about this, like risk management. Okay. What that really entails is number 3. Okay. You can put that down, is position and sizing. And basically what that is understanding how much capital that you have to work with first and foremost. All right. And knowing how much makes sense logically to be able to risk per trade. Okay, so if you got, say, let's say a $5,000 account, right? You don't want to be over leveraging a certain amount in your account, and you really want to keep it as minimal as possible. So maybe you're going to say, I'm going to go in with a 5% risk. It means I'm looking to capitalize on using my capital, using 5% of my capital on each trade. Okay, no more than that. All right, and then you're as far as how much you're actually looking to set your your daily loss at for that particular trade. Again, we're risking 5% of our account. Maybe we don't want to take more than a hit on 3% or maybe 4%. Okay, again, we want our positional size and mean how much we're looking to make, okay, or how much we're looking to actually allocate into the market or leverage 5% of our capital, but we don't want to take a hit more than we're actually leveraging into the actual market. If that makes sense, because then now you start to deplete or eat at your capital if you're taking losses that are larger than you're actually looking to leverage within the market. Okay, so this helps us minimize drawdown on our account. Okay, again, this helps us minimize drawdown on account. So you should have a max drawdown per day of what you are potentially looking to risk. Okay, all right, you don't want to go over that. Okay, so whatever you have in your account, come up with a specific amount. I can tell you right now, a good margin probably is 5 to 6% of your account size, and then maybe not take or put in a daily loss or per trade of maybe around, say, 2 or 3%. Okay, maybe as much as 4%, and that's going to be it. All right, so again, that'll be the third part of the trading plan, the risk management part of the plan. Understand that. Now here's a biggie that I've talked about plenty of time. Trading schedule. I've done a few videos on this. You can put this as part of like maybe 4 of your trading plan. Okay, again, these are all components that are going to help you succeed at becoming a great trader in the future markets. Trading schedule. All right, what does that consist of? Depicting a time frame, all right, during the day. What can you trade, or when can you trade? For me, I like trading and looking at the markets pre-market, meaning between 7:30 and 9 o'clock, that first hour and a half, okay? And then typically around about 9:45 to 11 o'clock, maybe 10:30, depending, I'm looking to actually trade. That is part of my plan. I try my best not to do any trading after that. I shut it down. Okay, and you should also have, as far as like how many trade, a max that you're looking to take. So trading frequency, meaning how many trades am I looking to take during the actual session in which I'm looking to trade. I'm looking for 1 good solid trade a day. All right, maybe 2, but most times if I get my 1 and done, I am done for the day. If you do not do that, then you're going to allow yourself to start doing over trading, and then let's say you've lost on the second trade, so now you got to play catch up because you won 1, you lost the second trade, so now you feel like you need to go back in again. No, you do not. Please don't do that, because now you find yourself into revenge trading. If you lost for the day, don't get so upset about it. Again, that's where the whole risk management part comes into play as far as how much I'm looking to leverage into the market. You want to, understand that piece right there, because that's a major component that's going to help you sustain your account. Okay, and always sustain profitability in a sense to where you can see the next day to be able to trade again, if that makes sense. So avoid the over trading part, eliminate the high frequency number of trades that you're actually taking. And number 5 is kind of like just a simple part to the actual trading plan. It's just identifying the tools or resources that you're going to actually use, meaning the broker, the trading platform, making sure you understand the ins and outs of what you are buying into, okay, when it comes to the platform and broker of choice that you're using, and also the data feed of choice that you're going to use, whether it's Rhythmic or CQG. So those are things that you want to be tapped into and understanding. You also want to understand when it comes to news, okay, understanding and having a specific calendar to look to each and every day, and understanding the economic news events and steering away from those times when the market is at its highest volatility points surrounding news events. If that 100% doesn't make sense, then I don't know what does. And I'm going to wrap this up with just basically number 6 and really number 7. I know a lot of people, and this works, especially for beginner traders, is keeping a record of journaling your trade entries, okay? Not only that, but, how much are you profiting or losing on the day? Have a spreadsheet for that. Because, again, day to day, And for a weekly to a monthly basis, especially when you look at it from a weekly basis, you want to make sure that you are profiting, and meaning your gains are bigger than your losses. So at the end of the week, you should be profiting in the green. I have a rule of thumb to where I want to be green on the day, okay? And I know that's hard to do if you take a losing trade for the day and you're one and done, then you just take a loss, right? So a lot of people say that I'm going to get back into the market and make that up. Well, if not, if you do that, then you may dig a deeper hole for yourself, and then, that second trade, you may take a loss, whatever the case is. I typically speaking, I talk about in plenty of videos when the market comes back against me and it's kind of hitting past an area, especially if I start to see where it's coming past my break-even point, I'm breaking to that area, especially if we started moving higher and I'm bullish, the market's bullish, and I'm looking for a entry to go long off a demand area, and for whatever reason I'm profiting, and then the market starts to swing back, I'm gonna start closing my positions out, okay? Because I don't want to take a loss. You got to cut the losses early so you're not taking a full hit, say for example at your stop. All right, but also you want to be journaling your entries. So this helps define or help you go back and look at, or you can actually record if you want to, meaning do a video recording of you actually trading. Okay, and that way you can understand and go back and say, oh, I now understand why that trade didn't actually work out or why it failed. And sometimes we may not understand why. I mean, it's just simply put, we don't control the market as retail traders, and so the market's going to do what it wants to do. You have to understand that. But taking high probability setups are what we're centered and thinking of. You should always be thinking about taking those type setups because they tend to going to work out in your favor. Okay, but journaling helps out because it gives you a record to which you can reflect on to see good and bad trades on both sides. All right, and then the last thing, I'm just going to say this right quick. Number 7, learning, continuously learning. I do not ever stop doing homework. I'm always going back testing, components surrounding the strategy on a daily basis. I'm always doing that. Even on the weekends, I'm going back and continuously looking at setups in which I took over the previous week. If I'm trading 5 days a week, I'm going back and looking at those 5 trades that I've taken Monday, Tuesday, Wednesday, Thursday, and Friday, unless I did not trade one particular day or 2 days out of the week because maybe I had something going on, or it was a holiday event, it was a bank holiday, or whatever it may have been. You always want to make sure to keep your mind sharp and looking at setups you've taken, because the market is always doing something different. Okay, but I just wanted to share with you guys today how having a well-planned, structured trading plan, okay, can actually help enhance your trading, okay, and allow you to become successful. All right, regardless of the markets that you're actually looking to trade. But we as futures traders, we trade and looking at the future market. So just make sure to have one that is devised, that works in your favor and is suited for your needs only. Okay. All right. Don't go copy someone else's trading plan because it may not work for you. Everyone's trading plan should be individual to themselves. So how many of you out there actually have a trading plan that you're working off of each and every day and sticking to it? If so, just simply drop a yes down in the comment section. All right. Or say, no, I don't have one. I'm currently in the process of building one, and this video content has helped me out understand by better means what I need to include in my trading plan. But just leave me a comment down below. Do you have a structured trading plan that you are constantly on a daily basis using that as basically the rules that outline and define how you're going to actually trade? Yes or no? All right. I'd like to hear from you guys. Okay. And you can also, leave other comments as well. If this video has helped you to understand how to build out or give you some building blocks that actually help you put together a solid trading plan, drop a comment down below. But other than that, guys, that's really all I have today. I wanted to talk in detail more about how to create and some of the components to leading you to having or creating a successful trading plan. But other than that, appreciate you for tuning in. If you're not a current subscriber, please take the time to go ahead and click on the sub button down below. Make sure to turn your post notifications on so you do not miss any other uploads here on this channel. Now, to anyone out there, to everyone that constantly is DMing me and asking me about how to become an elite member, what that basically means, because there's probably some people that watch right now trying to say, what's the elite membership? All that is, if you want to become an elite member, that gives you access to all my trade breakdowns, to where I'm going through and walking you through trade setups after 1, after 2, after 3. Tons of them on there that you can actually watch. You get the market structure video covering market structure for anyone struggling with that, and as well as the video playlist. All that, okay, we're talking about tons of private community quality video content that is not made public here on the channel that will help you to understand the strategy and how I trade, just as well as many traders that are part of the Discord community. You can scroll down to the description portion or down in the description portion of the video. There's a link there titled right below the Discord link. The Discord is free. The second link is to become an elite member. You click on that, 2 tiers will pop up. Make sure to choose the second one for $6.99. And that's going to give you direct access to become a member, part of the elite membership program, to where you can gain access to all that private community content. It's only $6.99 a month, not a day, not a week. It's monthly. Okay. So I appreciate everyone who's currently, involved in part of the memberships. I thank you guys who are members. I actually dropped the video yesterday doing a trade breakdown and doing a recap on yesterday's trading session. So again, there's tons of those that type video content on there. But that's all I want to talk about today, guys. I appreciate it. If you found value in today's video content and this topic is going or has helped you or is going to help you feel that you feel is going to help you devise a solid trading plan, please drop a like on the video. Take care. See you in the next one.